Chris Conway from the Australian Stock Report is joining us live from our Melbourne studio. Chris, wonderful to see you there and Happy New Year. It's great to have you on the program.
Thanks, Leanne. It's nice to be back.
Now, Chris, let's just start off with the broader index. Late last year, we remember talking to you about your sort of layout for the ASX 200. Your call was for that 5,800 mark to be reached. Of course, recently we did move back through that. We've pulled back a touch since then, but I note that you are re-upping your bullish outlook. The target is now 6,000. Talk us through this. I mean, how quickly do you think we could get there and what will support that rise?
Look, I think an absence of any bad news and the current momentum in the market are really the two things that will carry us to 6,000. That 6,000 target is not without some caveats, of course, but I think last night's action in the US was a really interesting microcosm of what's going on in markets at the moment. Trump had his presser, of course. Markets sold off fairly aggressively amid and on the back of some of the things he was saying. And by the close, US markets were higher. So there's obviously some exuberant momentum in the market at the moment, both in the US and probably locally as well. It may be a little bit unfounded. Valuations are starting to be stretched, but it is momentum nonetheless, and until it changes, it's likely to carry markets higher. And if Trump not talking about a few of the things that he was expected to talk about last night, which I think a lot of the people don't expect him to be able to deliver on anyway, is the worst of what we're getting in the current news cycle, well then I would suggest that we do have a vacuum of an absence of bad news. So that momentum and the absence of bad news, I think, can see the market carry higher. They're not the strongest reasons. And of course, look, in reality, it's not that far to 6,000 anyway. But I do think we get there, and then ultimately reporting season will be imminent or indeed upon us. And it will come back to valuations, whether or not companies are able to deliver or not.
Just on the US market, because we're obviously taking on from a lot of those leads, the NASDAQ is sitting at a record high at the moment. The Dow Jones 19,954, so that elusive 20,000 mark is still just in reaching distance. If earnings keep humming along under Trump or President-elect Trump, economic growth picks up thanks to a boost in spending and other stimulus. Do you think we could see the Dow moving past that 20,000 mark?
Look, I think absolutely at some point we get past 20,000. I mean, a lot of people talk about 20,000. It is obviously a big, nice, round number. I think it has ultimately very little relevance. So I think, you know, whether we punch above it by 100 points and then slip back below, or whether we clear it by 2,000 points, I think absolutely it gets cleared, and probably in the immediate future as well as in the next couple of weeks. It's really what the market does after that, I think, that is far more important. But if all of those things that you just talked about happen, you know, further economic growth and spending and interest rate normalisation under Trump come to fruition, and we get a stronger, healthier US economy, then absolutely it can kick on. Where the ultimate target is, look, Leanne, as a shorter-term sort of focused trader, I don't generally tend to give year-end targets. I'm not about to break that mould now, I'm sorry to say. But if all of those things happen, like I said, that you're talking about, then we can see this current rally extend, although I do think we have to have a consolidation period in there at some point. And it is very likely to be as earnings season rolls through. I think people take some time to digest the numbers, both in the US, or of course US reporting season has already started, but it really ramps up this Friday when a lot of the major banks report. So I think people will take some time to digest the numbers. They will get a very good and clear understanding of what is going on in corporate America and indeed corporate Australia. And if we get some of the macro boosts that you're talking about, then absolutely the market can continue to rally, and I think rally quite strongly.
Now, the other big theme at the moment that's really underpinning these moves is the rise in commodity prices. And again, materials today, they're the second best performing sector on the market, up 0.6%. We know they've been surging on expectations of a healthier global economy. This is obviously not a new theme, but on the expectation we don't see a hard landing in China, do you think this theme will continue this year?
Yeah, absolutely. It might not be as aggressive as what we saw throughout the second half of last year, but I think the commodity story does continue for at least the next quarter. Part of that is the fact that spot prices are currently trading well beyond the prices that are plugged into a lot of models at the moment. So a lot of brokers are playing catch up. And if the spot prices or commodity prices remain where the current spot prices are, again, there's a lag there that needs to be caught up on. So, look, this morning we added South 32 as a long. I was actually tossing up between BHP and South 32. Now, South 32 is probably one of the only materials plays that is down on the day, unfortunately. Should have maybe had a look at BHP, but either or, you swap them in or swap them out. They're two commodity plays that we particularly like due to their diversity. They're more than single commodity producers. They both have quality assets. And like I said, I think we've got further for those stocks to run.
All right, well, just taking on, I guess, from that theme there, a lot of brokers are continuing to pay sort of catch up here. Spot prices for a lot of those commodities remaining above what most models are accounting for. What stocks would you be taking advantage of right now in the commodity space?
Yeah, so there's a host. Obviously, other than South 32 and BHP, which I've already mentioned, Rio Tinto was another one that I had a very close look at this morning. Whitehaven Coal. All of those names, again, it's sort of don't reinvent the wheel at the moment. And again, I come from the perspective of a short to medium term trading perspective. I expect the current environment to continue to remain steady in terms of commodities, at least for the next quarter, over which time, you might get another 10% bump in these stocks. Further out, I'm less inclined to make a call because that's not the core competency that I have. So any of those stocks that have performed well in the back half of last year, I think they can continue to perform well. Ultimately, the thesis here is I don't think there's going to be anything that's going to upset the apple cart. And even if spot prices for commodities do pull back from where they currently are, they're only pulling back to levels that are already plugged into the models, as you say. So I don't think there's potentially a great deal of downside. Obviously, that's the case. Otherwise, I wouldn't have taken on South 32 this morning.
Now, very quickly, another stock I know you're watching is Ardent Leisure. Obviously, with the Dreamworld tragedy last year, we've seen shares selling off pretty sharply, and we're just seeing Ardent trading at the moment at about $2.28. What is your view on the stock going forward? Do you think all of the bad news is now priced in?
I would think so, yes. I think we're very close to or at the bottom of the bad news cycle regarding the tragedy in late October. Indeed, it was a horrible tragedy. Anytime people lose their life, that's rightly what it is characterised as. But I think the sell-off in the share price perhaps was overdone. In the days after the tragedy, the stock price fell more than 30%, down to, I think, about $1.82 was the low. As you say, it has recovered. It's back into $2.28. The company came out with what I would call a fairly solid trading update recently. You'll forgive me, Leanne, as I refer to the cheat notes I have here for the quotes, but they referred to very positive guest sentiment and strong revenue growth at their main event business. Of course, they also sold their marinas business over the break for a circa $125 or $130 million, which was above what they expected. So I think what will happen now is that analysts and indeed hopefully the broader market will refocus on the company's growth profile and what the board is doing to further the growth prospects of the company. I think hopefully that turns and we see some further upside in the share price.
All right, fantastic. Chris, we'll wrap it up there. It's been wonderful having you on the program. We'll look forward to talking to you again soon. Thank you.
Thanks, Leanne. Cheers.
Chris Conway joining us there live from the Australian Stock Report.